Datavault AI Inc., trading under the ticker DVLT on the NASDAQ, is currently sitting at 0.74 USD, up 0.0051 points or about 0.69% so far today as the market remains active. While that modest green tick might look like a standard quiet day for a small-cap stock, there is a much heavier story brewing beneath the surface that most retail traders are completely missing right now. The common narrative around Datavault AI is that it is just another micro-cap player trying to catch the tailwinds of the larger artificial intelligence boom, perhaps hoping to be the next NVIDIA stock or Apple stock in terms of pure growth potential. But the reality is far more complex and, frankly, far more interesting for anyone looking at self-investing or managing an individual brokerage. While the crowd is looking for a quick move based on sector hype, the actual data suggests a company that is navigating a very narrow path between massive scaling and the brutal reality of capital constraints in a high interest rate environment. This gap between what people think they are buying and what is actually happening on the balance sheet is where the real risk lies. If you're using platforms like Robinhood or Fidelity to track these movements, you've likely noticed that the volume on DVLT has been inconsistent lately. This morning's movement to 0.74 USD shows a slight stabilization, but the expectation from the broader market was a much more aggressive recovery after the recent volatility. Investors expected the integration of new data management tools to immediately translate into a higher valuation, yet the reality is that the market is currently repricing the entire AI sector based on actual revenue rather than just promises. This is a crucial distinction. When you look at investment through a lens of Schwab Intelligent Portfolios or even something like a sophisticated Fidelity trading platform, you start to see that the algorithm-driven side of the market is being very cautious with companies in this valuation range. They are looking for sustainable cash flow, not just a clever ticker name. The recent intraday movement reflects a tug-of-war between speculative buyers and institutional sellers who are trimming positions. On the Interactive Brokers platform, we're seeing a steady stream of small lot orders, which usually indicates retail interest. However, the larger block trades are notably absent, suggesting that the big players are waiting for a more definitive signal before committing serious capital. This creates a vacuum where the stock can drift on low volume, making it susceptible to sudden swings if a single large order hits the tape. For those involved in online investing, this is the danger zone. You see a 0.69% gain and think stability, but without the backing of institutional volume, that gain is built on sand. The market expectations for Datavault were set high during the initial AI surge, but the reality of their quarterly burn rate has forced a recalculation of their immediate ceiling. The sector momentum for AI infrastructure has been cooling off as investors rotate back into value or high-yield assets. Even when you look at how people are using the Robinhood app or SoFi Invest tools to pick up shares of Tesla stock or other high-beta names, there is a clear trend of moving toward companies with proven ecosystems. Datavault AI is currently struggling to prove its ecosystem is indispensable. Their daily swings have been tight, often trapped between the 0.70 and 0.80 range, showing a lack of conviction from both bulls and bears. This consolidation phase is often a precursor to a breakout, but the direction is rarely what the common narrative predicts. Most people expect a move back toward the dollar mark simply because it feels cheap, but the technical reality shows a series of lower highs on the weekly chart that cannot be ignored. When we talk about online investment and investment help, it is important to look at the macroeconomic pressures hitting these smaller tech firms. High interest rates make it expensive for Datavault to fund its operations if it needs to go back to the debt markets. This is why you see such a disparity between the performance of large-cap tech and these smaller entities. While Fidelity Wealth Management clients might be sheltered by a diversified mix of Fidelity ETFs and Fidelity mutual funds, an individual trader on Robinhood stock trading is taking the full brunt of this volatility. The expectation was that AI would be a rising tide lifting all boats, but the reality is that it has become a filter, separating those with real proprietary tech from those who are just renting space in the cloud. Let's look at the business itself for a moment to understand why the market is hesitating. Datavault AI operates in the data storage and management niche, specifically focusing on using artificial intelligence to optimize how large datasets are indexed and retrieved. It's a solid business model on paper. They provide a necessary service for corporations that are drowning in their own information. In past reports, they've shown a decent growth in their client base, but the cost of acquiring those clients has been high. This is the part of the story that doesn't make it into the flashy headlines. When you use the Robinhood trading platform or look at SoFi active investing tools, you might see the top-line growth and think everything is great, but when you look at the operating margins, you see a company that is spending a lot to keep its place at the table. Past performance shows a history of volatility that should give any self-investing enthusiast a pause. They have had spikes in the past that were driven by partnership rumors that never quite materialized into the massive revenue streams investors hoped for. This is a classic example of the expectation versus reality trap. The expectation is a partnership with a giant like Nvidia stock or even a cloud provider like Amazon, but the reality is often a pilot program that takes years to scale. This time around, the market is being less forgiving of these long lead times. If you are managing your own Fidelity IRAs or using Interactive Broker stock trading for your main account, you have to ask yourself if you are willing to wait 2 or 3 years for this reality to catch up to the current expectations. Comment below how many shares of Datavault AI you currently hold, or if you are waiting for it to drop back toward the 0.50 level before buying. Looking ahead, the future outlook for DVLT depends heavily on their ability to secure a major contract that provides recurring revenue without the high overhead they currently carry. There are several catalysts on the horizon, including a rumored software update that could significantly lower their server costs. If they can execute on this, the stock could easily break out of its current 0.74 USD rut. However, the risk remains that they will need to raise more capital, which would dilute existing shareholders. This is a common theme in the Robinhood investment world, where retail traders get excited about a low share price only to find their ownership stake shrinking 6 months later due to a secondary offering. The SoFi trading platform and other investing sites have seen a lot of chatter about Datavault's potential as an acquisition target. This is the ultimate expectation play. Everyone wants to buy the stock at 0.74 USD and see it get bought out at $3. While that is a possibility, the reality is that larger companies are currently more interested in hiring the talent away from these smaller firms than they are in buying the actual company, especially if the intellectual property isn't uniquely defensible. This is a harsh reality of the current tech landscape. If you are using SoFi stocks or looking for investment help through various channels, you must weigh the probability of a buyout against the probability of continued sideways trading. To summarize what we are seeing with Datavault AI, the current price of 0.74 USD is a reflection of a market that is fundamentally undecided. The expectation of an AI-driven surge has met the reality of a cautious economic environment and a company that still needs to prove its long-term viability. We've seen a small 0.69% move today, but the real story is in the lack of institutional commitment and the high cost of growth. Whether you are using Fidelity brokerage, Robinhood crypto and cash management, or Interactive Brokers fees to manage your portfolio, the strategy here has to be one of extreme patience or extreme caution. The gap between the hopeful narrative and the hard numbers is still too wide to ignore. Expectations were that small-cap AI would follow the lead of the giants, but the reality is that the market is now demanding proof of profit. Datavault is at a crossroads where its next few moves will determine if it becomes a staple in an intelligent portfolio or just another footnote in the history of tech speculation. The authority in this trade doesn't come from following the crowd on SoFi investing or checking the latest hype on social media. It comes from understanding that 0.74 USD is a price that demands a lot of questions before it gives any answers. Stay focused on the volume and the actual revenue reports rather than the daily flickers of green or red on your Fidelity mobile app. For anyone navigating the world of online investing, remember that the most dangerous thing you can do is confuse a cheap price with a good value. Datavault AI has a lot to prove. It is not enough to just be in the right sector. You have to have the right balance sheet. As the market continues to trade today, keep a close eye on that 0.74 USD level. If it breaks down on high volume, the reality might get even harsher for those holding on to the expectation of a quick recovery. If it holds, we might just be seeing the base of a very long and slow climb. Either way, the depth of your analysis will always be your best tool in these volatile markets. As we wrap up this look at DVLT, the contrast is clear. The market narrative wants to see a tech underdog win, but the financial reality is a company working through the growing pains of a crowded and expensive industry. The movement today is a small piece of a much larger puzzle involving institutional sentiment, interest rate pressures, and the brutal competition for data dominance. Whether you are using a SoFi robo-advisor or making active trades on the Interactive Brokers platform, the need for a sober look at the facts has never been greater. Datavault AI is a case study in why we must always look past the ticker and into the truth of the business. The reality of the market always wins in the end, and right now, that reality is telling us to watch the margins more than the headlines.